Hello and welcome to Indicator series of Forex Monopoly. In this video, I will tell you what is MACD and what is it used for. MACD stands for Moving Average Convergence Divergence. It is a trend following momentum indicator and is a lot different from momentum indicators which we saw in the previous videos. If you haven't watched those videos yet, you can check out the Indicator series playlist or click on the I button. Now, unlike RSI and stochastic oscillator, MACD is a trend following indicator used to trade trending market, and it does not even have overbought and oversold levels. It is shown as two lines moving without boundaries and moves freely above and below the baseline. Generally, a MACD consists of a MACD line, a signal line, a baseline and a histogram. Like all the other indicators, the settings of this indicator can be customized. But considering the default setting, the MACD line is calculated by subtracting the 26-period moving average from the 12-period moving average. And the result is shown in the form of a smooth line. As this line shows a relationship between two EMAs and not the price. And as a single EMA is not reliable, another line is plotted on the MACD line. This line is the EMA of the MACD line and called a signal line. Now, as the name suggests, this line is used to spot buy and sell signals. I will tell you how traders use this indicator later in this video. But first, let's understand the mechanism of MACD. Now, these two lines are plotted over a baseline, which is at level 0, and also a histogram is drawn over this baseline. Let us now go to the chart and understand MACD properly. So this is the MACD indicator. The blue line is the MACD line and the orange line indicates the signal line. And these two lines are plotted over a baseline. Now MACD crossing above the baseline or 0 level gives us a bullish signal, and when it moves below the 0 or the baseline, it gives us a bearish signal. Also, when MACD turns up from below 0, it is considered bullish, and when it turns down from above 0, it is considered as bearish. Now when the MACD line crosses the signal line from below to above, the indicator is considered bullish. But remember, the lines should be below the 0 lines for a stronger signal. Now, in the same way, when the MACD line crosses from above to below the signal line, the indicator is considered bearish. This time, both the lines should be further above 0 lines for a stronger signal. This histogram over here gives a signal of confirmed momentum change. That is, when green bars are formed above the baseline, it tells that the buyers have entered the market and gives us a bullish signal. And when the red bars are formed below the baseline, it tells that the momentum is with sellers or sellers have entered the market and the market is bearish. Now, just like other indicators, you can also change the setting of this indicator. You can change the inputs as per your need and also change the colors of the lines and histogram. Now, if you lower the period of the slow and fast EMA, the indicator will get more sensitive to the price and give you fast and more signals. And due to this, MACD works best with a lower period if you use it for scalping. But by doing that, it will give you more false signals. So let us add another MACD, lower its period and see what I meant. Now if you compare both to the price, the MACD with a lower period has given us an early signal by crossover. And if you see here, the MACD lines crossed the signal line and the price moved up. But while the MACD line with a lower period already gave us the signal, the MACD line with a higher period is lagging behind. So using a MACD with lower period can be very beneficial for scalping. But then you should be aware that it also gives a lot of fake signals. Now, many traders use this indicator differently. They all consider different factors to use MACD. So let us see how traders use this indicator. There are three most common ways by which traders use this indicator. The number one is identification of trend based on the crossover of the baseline and the MACD line. When the MACD lines move above the baseline, traders see it as a bullish signal. And when the MACD lines move below the baseline, traders view it as a bearish trend. Number 2 is MACD line and signal line crossover signal. When both the lines, that is the MACD line and the signal line, is far below the baseline, and when the MACD line crosses the signal line and moves above it, traders take it as a buy signal and enter a buy trade. Like you can see here, when the MACD line crossed the signal line and moved above it, the price started moving up. In the same way, when both the lines, that is the MACD line and the signal line, is far above the baseline, and when the MACD line crosses the signal line and moves below it, traders take it as a sell signal and enters a sell trade. Like in this example, here the MACD line crossed the signal line and moved below it, and at the same time the price started to move down. Number 3, MACD line and signal line crossover plus the histogram. Many traders use a histogram with the above method to confirm the buy and sell signal. Like when both the lines, that is the MACD line and the signal line, is far below the baseline, and when the MACD line crosses the signal line and moves above it, traders look for the histogram to move above the baseline and form green bars, and then consider it as a buy signal and enters a buy trade. Like in this case, here we can see that the MACD line and the signal line crossover happened, and at the same time the histogram turned green and the price started moving up. So the traders first look for the crossover and then wait for the green bar to form above the baseline and then enter the buy trade. Now in the same way, when both the lines, that is the MACD line and the signal line, is far above the baseline, and when the MACD line crosses the signal line and moves below it, traders look for the histogram to move below the baseline and form red bars, and then consider it as a sell signal and enters a sell trade. Like in this case, here we can see that the MACD line and the signal line crossover happened, and at the same time histogram turned red and the price started moving down. So here the traders first look for the crossover and then wait for the red bar to form below the baseline and then enter the sell trade. Number 4 is MACD divergence and crossover signal. Traders use a MACD divergence to spot the reversals and crossover signals for confirming the reversal. The traders first spot divergence using the MACD line and signal line and then wait for two lines to cross over. By the way, if you don't know what divergence is, you can check it out by clicking the I button. Now let us understand how do traders trade using this technique. As you can see over here, the price created a higher high, but the indicator created lower high, giving us a divergence signal. After that, here the MACD line moved below the signal line, giving us a confirmation of reversal. So traders often spot a divergence like this and then enter the trade after the crossover happens. As you can see, after the divergence and crossover, the price started to move down and hence gave a perfect reversal. So these are the most common ways by which traders trade using this indicator. Again, this indicator works pretty well but lags. That is, it gives us late signals. So just like other indicators, this indicator should not be used alone. It should be combined with other indicators or technical tools. I hope you understood everything correctly. If not, then let me know your questions in the comment section below. I will be happy to help you. And if you like this video, then let me know by clicking the like button, and don't forget to subscribe to this channel, as I will be uploading many more amazing videos on other indicators very soon. Thank you.